investors are playing the same game that you're playing, and now you're losing. Here we go.
Buy the dip, buy the dip.
Here we go. Buy the dip, buy the dip. Here we go.
Buy the dip, buy the dip.
Here we go.
Push it. All right, folks. I don't know if you ever listened to this video or even watched it because it is very well put together. Actually, in this video, I want to talk about Meet Kevin. And I know I'm pretty sure you know he's a pretty well-known YouTuber or personality around the YouTube space. Why? Because he's been doing pretty well financially, and he's a let's just put it this way, valuable. He adds a lot of value to the financial place. So when it comes to investing in stocks, investing in real estate, based on his own experience, going from earning $1,800 a year back in 2009 to being a multi-millionaire. So what is actually kind of being a breaking news within the space here in YouTube is the fact that he just posted a video this morning saying that he is ending his channel.
In this video, I'm announcing a change along with some exciting information. But first, I'd like to clear up what's going on.
All right, so this started a couple of days ago when he actually posted this video, Why I Quit and Disable Comments. And this video was just following up an announcement that he made where he was actually kind of stunning because he sold pretty much all of his stocks and some of the real estate for a total amount of $20 million plus. Why? Because before this meeting, before this video went out, he actually thought that the market was going to crash. And at the time, the market was crashing. All right. So what exactly is behind this whole thing with me, Kevin, or Kevin selling pretty much everything, going heavily in cash and owning pretty much 0.1% in stock? Is it really true that the market is about to crash and that we're going to have a recession in the next coming years, not only in 2022? That's what I'm going to try to answer in this video. All right. So if you look at the market kind of rebounding a little bit based on the fall or the sell-off that happened early in February. All right. And that's why I guess Kevin, based on the analysis, which by the way is a thorough analysis that he puts out there, especially for those who are a part of his classes and the membership, where he actually have a pretty dynamic information brought out and use those information in order to actually make move on the stock. So it's either investing, day trading, swing trading, crypto stocks, and alternative investments. Now, it might be true at the time, around February 1st, that the market was about to crash because some of the technical, some of the indicators were very, very bearish. But now, when you look at actually some of the sectors that I believe Kevin is heavily invested into, well, it does make a little bit of sense into why he may be wrong. And I guess that's why he posted this other video a couple of days ago. That was 4 days ago, February 5th, 4 days after he actually decided to, announce that he sold everything. Holy shit, I could be wrong about the stock market. And I think he was on the short term, because since then, I say, for example, the NASDAQ. I'm taking the NASDAQ because I believe most of his stocks are high growth stocks. He loves the Teslas, the Neos, the Enphase, the solar, everything that is about futuristic and changing the world, kind of what, the ARK Invest thematic when it comes to investing relies on. So based on the video and his views on when the market was crashing, we were already losing 2% just one day, and that was just for this short period. All right, not based on where the market was coming from since the beginning of the year in January. That was a total bloodbath. But where things get a little bit confusing is the fact that, well, if he hadn't sold in order to save $2 to $3 million in his entire portfolio, well, he might have, and he pretty much had, he had lost this strong recovery and a rapid recovery, about 4.3% on the NASDAQ. And I don't want to get into, some of the stocks like Snap, for example. Snap went the exact same day he sold everything from $24 to now sitting at $40. This is a 65% upside. And at the time, yeah, Snap was being down 30%. So yeah, I'm using this to show you guys that yeah, it made sense then that it was kind of a smart move to sell all the stocks. And so far since 2020, then I started watching, Meet Kevin videos. I can assure you guys that anytime, pretty much 99% of the time that he was calling on market falling, he was pretty spot on. Maybe not for this time, but in this video that he posted actually today, he's mentioning reasons why he still believes the market is about to go very, very substantially down, not maybe in 2022, but in 2023, and we're going to be a very bad recession. This is where I actually don't necessarily agree with everything he has to say or the reasons behind this move. First of all, when you look at corporate earnings are still very strong. And because corporate earnings are still very strong, I still don't believe, it is a it is a bad thing for the economy, because not only these corporate earnings shows that the strength of the economy is still here, but when it comes to COVID, I mean, Dr. Fauci this morning said that he can see the US getting full blown out of this pandemic in the next coming months, and expect to see what other countries, dozens in countries in the world are dropping, COVID restrictions, the mask mandates, vaccines mandates, restrictions around travel, etc., etc. So this is another sign of a booming economy because there is a pent-up demand coming. All right. And that's why I guess sectors like, the airlines have been recovering a lot because business travel is also picking up, maybe not to the levels of 2019, but it is another sign. Now, when it comes to inflation, I think the market already priced in a little bit, not fully, but a little bit, what the expectations from the Fed are going to be, especially when it comes to March. So if the Fed increases interest rates by, 0.5% or 0.25%, I think the market already kind of accounts for that at this point. But nobody knows exactly what it will look like after the next 2, 3, 4, 5, 6, or even 7, 8 interest rate increase or hikes, according to Mary Bank of America lately. So based on this, I think inflation is still, or may still be, a little bit overblown. And I think Kathy Wood also be kind of goes along with this same story. Why? Because inflation cannot continue to be at all-time high all year long. Why? Because this is just, I don't want to use the term transitory per se, because it's rich. But the thing is, the cause of inflation in 2021 is really due to what happened in 2020 with COVID. All the factories were locked down. Nobody was working, but people kept buying stuff. Huge backlog, especially when you look at stuff like the chip shortage with cars, number prices for materials. I mean, everything is just expensive because we have the supply chain issues. So it doesn't explain everything, but it's a hunk of the rationale behind it spiking. So I believe inflation is still going to be here, but not as high as most of the market expected to be. And that's why I think it's going to go down a little bit, but not to what lots of people are thinking. All right. Remember that the market tend to over exaggerate on the upside or the downside some of the events coming, because it comes with uncertainty, because nobody knows exactly. It tends to be a little bit over exaggerated. Now, coming back to Kevin here, well, I think based on his portfolio, that's where we need to be a little bit careful, right? Because now that I can, the reasons why the market may not go as crash mode as he thinks, it's all about perspective, all right? Perspective, because when you look at Meet Kevin portfolio, again, it has a lot to do with high growth and tech sectors. But if you are not invested in those stocks, then it doesn't necessarily make sense for you to kind of follow suit on what he's saying. Let's just use an example here, two examples. If I use this small cap energy, Vermilion Energy, this is a Canadian company, but operating in mostly many Western countries. For the last month, the stock has gained what? 14%. for the last 6 months, the stock has been up 120%, which is not the case for a company or someone like Snaps, which the last 6 months is down 46%. So if you were holding this kind of stock, then you will be fine, totally fine. If I take this momentum stock that everybody's talking about on the tube, AMC, on the last 5 days, all right, since Kevin sold everything, AMC went 28% on the green. So just to say that if you own separate kind of different sectors or different strategy stocks, it doesn't make sense for you to sell the exact same time he did or to continue to sell the exact same time he did. Why? Because you are not on the same strategies and your portfolios are not the same level. And to end with this, I think it's also important to clarify the fact that, well, what lots of people don't know, one of the reasons behind Kevin, selling a bunch of these stocks is also because he's kind of pursuing big investment ventures. All right. And that's why I believe he's keeping that closer to the people on his membership courses, in order to add value, because it is tiring, as he mentioned in his video today. It's tiring to continue to make videos, especially at the open market, the closed market, and to constantly, be on the latest information, and add value to people through YouTube. Of course, YouTube is going to be is still his cash cow, but I think it makes more sense for him to raise that amount of money in order to pursue, especially at these new ventures, require a lot of capital. This is information we had from some YouTubers that are part of his, membership courses and membership class. So I'm not just pulling this out of thin air. Just again to say that it's about perspective. So will it be right? Will it be wrong? I guess only time will tell, because in this stock market thing, it's very difficult to always be right, even for the next 24 hours. So here you have it, folks.